Hello and welcome to Switzer Investing Insights, brought to you by nabtrade. And today we're going to look at 2018 and what have been the big learnings of that particular investment year. Paul, we're kicking off with two charts which I think are enormously interesting. One is the Dow Jones year to date and the other is the ASX 200 year to date. And what do you notice about both those charts?
It's surprising, the correlation is just is so close, Peter.
Yeah.
And I think that just tells us about the enormous impact President Trump has had on markets and is likely to continue to have on markets. Compared to any other president before him, he has had I can't remember somebody who's been such an influence on what's happened to global stock markets.
He's a hands-on economic interventionist, isn't he? The interesting thing, the first big sell-off in February, which CNN described as being insane, was related to the fact that the US economy was going so hard, so well, inflation was the fear and interest rates were going to rise too quickly. But after that, every other selling point had Donald Trump's fingerprints all over it, and trade war in particular was a big one. If we go right across the stretch of both those two charts, the final sell-off from about September, October, was related to more concerns about, and Donald Trump was talking about raising $500 billion US worth of tariffs on Chinese goods. That really spooked the market. Our sell-off was more sustained, and I think a part of that was because the Royal Commission was biting into bank share prices in particular. But if you look at the year, it's been the year of Trump.
Yeah, and there's some other things that probably aren't on that chart, Peter. Things like, for example, Trump's influence over the oil price. So you might recall that the oil price in the US went from $75 a barrel to $50 a barrel just in a couple of months, really at his urging for the Saudis to increase production. We saw the impact here on our energy stocks. We also had the issues with North Korea and the summit in June. Yeah. And then we had almost the berating of the US federal chair about why is he increasing interest rates. Right. And surprisingly, at the end of the year, no connection, but the US Fed chair came out and said, well, maybe interest rates are getting close to neutral. Yeah. So President Trump's had an enormous impact on markets, and I think that's going to continue into 2019.
Oh, yes. He is the president that no stock market can ignore. Okay, let's go to the next issue, Paul, and that is government interference here in Australia and its impact on investment decisions.
Well, you call it interference, Peter. I think some would say more intervention.
Yeah, true.
And really they're responding to, I guess, to community concerns. So we saw it obviously first of all with the Royal Commission into banks and the financial services industry. And the success of that Royal Commission, what it found out, how much the public's on side. We've now seen a Royal Commission announced into the aged care industry, and of course that had an impact on the aged care stocks immediately it was announced, and it put them under a lot of pressure. We're seeing intervention, or at least discussion around the energy industry. Someone might say this is a result of AGL's position on the Liddell Power Station, but potentially powers for government to arrange with court permission the divestiture of key assets. So it seems to me there's a trend now back to intervention, back to governments being involved, responding to community concerns. I don't think that trend's going to continue, and so
discontinue. It's going to keep on going, you mean?
Will continue. So I think that the political risk, or at least the sovereign risk that investors need to consider now, has increased. So if you're investing in different stocks where governments can get involved or depend on government expenditure or whatever it is, regulation, I think that risk is increased.
Yeah, and political pundits have made it very clear that energy price is going to be a critical issue at the next election, which of course is in May, which is another sovereign risk issue.
And ahead of that election, it's unlikely we're going to see that intervention go away because there's some populist causes out there.
Exactly. Okay, the third learning is around the success of the top 20 stocks.
This will surprise many. On the screen in front of you can see the performance of the different components of the market for 2018 up to the 30th November. Look, the main market, the ASX 200, it's down. Add back dividends, it's not down as much. It's down about 2.7%. But look, the top 20 stocks, at least on a relative basis, have outperformed. They're not the difference is relatively small, Peter, but they have outperformed better than the small ordinaries, which are your small caps and your so-called mid caps as well. And that would surprise many, and surprised me. I looked at the figures because in that top 20, of course, we have our four major banks in positions 1, 3, fifth and sixth in terms of the biggest stocks,
Yeah.
and they've had a pretty tough year. So it means that the rest of the top 20, the resources stocks, the Wesfarmers and Woolworths,
Industrials, yeah.
some of the medical companies have done pretty well, and perhaps shows you where the money has actually moved. So in some ways, perhaps it's a bit of a mean reversion. The top 20 didn't do as well in 2016 and 17.
Yep.
But I think what we're starting to see in a more defensive environment, the top 20 stocks will do better. And maybe looking ahead next year, where the Royal Commission winds up, we might see again continued outperformance.
Okay, so finally, we can't ignore in 2018 the learnings from Bitcoin.
Yeah, I think the learning here is about crazes, Peter. We know that they happen. I'm not necessarily a big bear on cryptocurrencies, but just before Christmas last year, Bitcoin got almost to US $20,000 a Bitcoin. It finished the year just below $4,000. That's a huge fall. And it just does tell you that all good things, all crazes come to an end at some point, and the issue is when you jump off them. And so if you're going to invest in things that are a little scary, a little higher risk like that, you've got to know when to get off.
Make them short term. Now, what about next year? What's the craze for next year?
Look, I'm not really sure, Peter. There will be one. I think it probably will be that we want in tech, and we'll probably find another rare earth mineral or something that no one's thought of yet. But there always are things that get overhyped, and the lesson here for investors is you have to separate the hype from the what's going on out there and work out when not to stay away. Get off the bus, leave something for the next man.
Okay. That's Switzer Investing Insights, brought to you by nabtrade. Thanks for joining us.